Welcome to today's market recap, and thanks for joining. In today's session, I will demonstrate a swing trading technique that you can use in any market condition to identify truly high probability and low risk 360 degrees trades. I will use only one trading system for the complete analysis, Q. It runs on Metastock and TradeStation platforms. Q has multiple components covering market, sector industry rotation, fundamental, technical, and even seasonality analysis, all done in 100% real time. I will use several of them today. Q was designed by Sagar Nandi, an active trader in multiple markets. You can learn more about Q systems from the Learn page on the website superiorprofit.co. For your queries, you may use the email ID tradingprofitably@gmail.com. Follow me on X handle Superior Profit for live market and stock analyses, all shared before knowing the results. And visit and subscribe to the YouTube channel Trading Profitably to watch detailed market recap, masterclass, and many other videos. Disclaimer: this demonstration is for educational purposes only. Sagar Nandi, or superiorprofit.co are not investment advisors. Nothing in this presentation is a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options, document from Options Clearing Corporation, to decide if options trading is suitable for you. Now, I will use Q systems to carry out market analysis across 5 distinct non-overlapping dimensions. If all the dimensions are aligned, say bullish, the decision is easy. That is the preferred trading direction. If the dimensions are showing divergent insights, you may do one of two things. Either stand aside or swing trade in both bullish and bearish directions in different stocks. Which option to choose depends on balance of evidence from the dimensions. If you are not sure, you can always stand aside. Once I derive the preferred trading direction, I may look for high probability and low-risk trade candidates in that direction. First dimension of our analysis is to look at two instruments, US dollar and Mega Cap Custom Index, that have tremendous influence on the market. US dollar tends to be inversely correlated with the market, though sometimes that inverse correlation does not work. Mega Cap Custom Index is directly correlated with the market, and that correlation always works, with more impact on some pockets of the market than others. Dollar Index. At the bottom, when it created a false downside breakout, I was bullish on Dollar Index. However, in the last market recap, we were here. Price had already come up significant distance from the recent swing low, and it was in a downtrend. Looking at that, I mentioned that I would not have any bullish view on Dollar Index. That was useful. This week, Dollar Index has come down. Backdrop color in weekly is bearish. Am I bearish on Dollar Index? No. Am I bullish? No. Why? The reason is the last 4 days candles in the daily chart. We have 4 indecisive shaped candles in a row that is preventing me being either bullish or bearish. I am indecisive. There is no preferred trading direction based on Dollar Index. Mega Cap Custom Index. If you look back on my previous market recaps, when mega caps were here, at the upper edge of the sideways range, I mentioned that I would not mind being bearish on mega caps. That was very useful. From the upper edge of the sideways range, it came right to the lower edge of the sideways range. In the last market recap, looking at the bullish indecision cluster at the lower edge, I mentioned I would not be bearish on mega caps. Instead, if it gave a bullish signal, I would not mind buying. Mega caps tried go up little bit, but if you look at the few candles early in the week, none of them had a bullish signal to buy. Instead, it came to all these declining direction lines. That resistance was enough to push price down again. The weekly is looking bearish in shape and color both. However, daily candle is indecisive. Overall, it is in a downtrend below the 50-day moving average and also the 200-day moving average. It is currently one of the weakest pockets of the market. There is no reason to buy it at this time. At the same time, the indecisive shape of Friday's candle is not allowing us to short as well. Second dimension of our analysis is using Q market breadth, internal health check. Usually, the market follows the internal health, not the other way around. Market breadth, total view, the broadest view of the market. The first thing to notice in the magnified section here are the 9 confirmed Hindenburg omens in a row. That is a cautionary signal. That was followed by 2 irrational exuberance. I showed in the last market recap that the Hindenburgs came from both NYSE and NASDAQ. Where did the irrational exuberance or bango signals come from? Let's find that out. The bango signals were from NYSE, the pocket that is stronger now. Together, all these are telling to be cautious and to avoid buying overbought stocks. Third dimension, market external view. This is how most people around the globe see the market. This analysis can be done using market ETFs, futures, or indexes. I will carry out this analysis using Q at a glance weekly daily charts. SPY. It is below the 50-day moving average and far above the 200-day moving average. In the Q entry chart, it is moving sideways. The sideways range created by watermark resistance at the top and trendline support and watermark support at the bottom. It is at the lower edge of the range, and Friday's candle shape is indecisive. It has a doji candle. Weekly backdrop color is bearish. However, Friday's candle being indecisive is preventing us from shorting SPY. If it can break below the trendline support and the watermark support, then it may give lucrative shorting opportunities in multiple stocks. QQQ, looking similar to SPY, below 50-day moving average, above 200-day moving average. Friday's candle shape is not a doji, but still indecisive with both upper and lower tails. Range bound, has trendline resistance at the top, watermark support at the bottom. Weekly backdrop color is bearish. My view is similar to that of SPY. Right now, there is no trade. If it breaks below the watermark support, that may give lucrative shorting opportunities. DIA. It is looking stronger. Above 50-day moving average and 200-day moving average, has no trendline resistance, only has trendline support. Those are not allowing us to short. At the same time, Friday's candle shape is indecisive. Color is red. This week's candle color is also bearish, and it has a headwind possible reversal signal. Those are not allowing us to buy. Therefore, my decision is to stand aside. IWM. This is also stronger. Relative performance is tilting up. It is outperforming the market, same as was the case for DIA. IWM is above the 50-day moving average and 200-day moving average, has trendline support in daily as well as in weekly. Weekly candle color is bearish, but shape is indecisive. It's moving practically sideways for several weeks. Daily color is neutral. Shape is indecisive. We saw indecisive candles in many market ETFs on Friday. That is telling us to stand aside. And though IWM is one of the strongest pockets, here also I'd like to stand aside. Our fourth dimension analysis is about sector industry stock breadth using Q-Edge. It shows the sector industry scorecard in real time and allows easy drill down to strong fundamental stocks. It also has bucket analysis, which pinpoints reversals with remarkable accuracy. Bucket analysis. 61% of S&P 1500 stocks are above the mid-Bollinger Band. That is bullish. It is not overbought, and of course, it cannot be oversold because it is bullish. On Friday, 100% sectors went up. Most of the industries and stocks also went up. It was indeed a bullish day. Was the week bullish? We can find that out from sector industries' stock breadth. The longer term, 1-month period, and 10-day period. Both are bullish. However, this week, 5-day period, is neutral. 2-day period is bearish. Friday is bullish, 1-day period. Notice one thing. Though Friday was very bullish, it could not cover the weakness of Thursday, and that is why 2-day period is remaining bearish. As a whole, the week is neutral. If we look back from long-term to short-term, from bullish it became bearish, and then bullish again. Where will it go next? It may be bullish next, or it may be bearish next. We cannot conclude anything from these sector industry stock charts, so here also my decision is to stand aside. The fifth and last dimension of our market level analysis is technical breadth using QFinder. Most of our trades are directional trades. For such trades, we profit by buying stocks going up or shorting stocks coming down. Technical breadth helps by showing the overall posture to adopt bullish or bearish, and allows easy drill down to find low-risk trade candidates in that direction. Weekly technical breadth. It is overall bearish and also bearish across all the categories. The bearish headwind alert is saying that stocks at a higher price level may come down next week. Daily technical breadth. This is showing a different picture. Overall, it is bullish and also bullish across all the categories, including momentum. Here, headwind is saying that stocks at a lower price level may go up. However, there are many stocks that are extremely overbought. Jump thrust is too high for too many stocks. Many of the bullish signals are coming from stocks at an already high price level. If we combine the weekly and daily technical breadth, it is telling to be cautious about buying stocks that are already at a very high price level. However, there may be some buying opportunities in stocks at a lower price level. Based on the analysis of the 5 dimensions, we are now ready to arrive at the most important trading decision. That is whether and where to buy or short, or whether to stand aside to decide the preferred trading direction. Combining the 5 dimensions to arrive at a conclusion. Let's recap. Dollar index. No insight from here that tells me to either be bullish or bearish. Mega cap custom index. Weak but does not allow shorting at present. Market breadth. It has many Hindenburg omens, Bango exuberance telling me to be cautious about buying. External view using market ETFs, telling me to stand aside. Bucket analysis. Bullish but sector industry stock breadth is indecisive. Finally, technical breadth. Stocks at a lower price level may give buying opportunities. However, be cautious in general, especially in stocks at a higher price level. My final conclusion is, I would like to stand aside in this market, wait and see where it is going. If the market falls down from here, there may be many shorting opportunities. If it goes up from here, there may be low-risk buying opportunities in stocks in certain pockets. For now, I decide to stand aside. Review of trade ideas shared earlier on YouTube or X. I regularly share live market analysis and trading ideas on YouTube and X, always before knowing the results. You may subscribe to the YouTube channel Trading Profitably and follow Superior Profit on X to receive the analysis and ideas in real time. In the last market recap, I shared only one trading idea, possible buying idea on GTM. However, also shared that it had earnings nearby. My buying idea was based on this candle. Earnings was on this day, Tuesday. I traded it on Monday using intraday precision entry chart, made a small profit, and traded it again on Tuesday using precision entry chart, made a small profit. On Wednesday, I tried for the 3rd time again using precision entry chart, and that day I made a small loss. After that, I didn't try to take the trade anymore. How did I take those trades? Let me explain that. This is the same stock GTM using 5-minute interval and precision entry pivot chart. This was Monday's open. After the open, it created the early range low and early range high pivots. On this candle, it went up with a bullish flow. Using the concept of flow trend following long setup, I bought at the close of that flow candle. You could put stop below the recent swing low. However, a safer stop would be below the day's low. Whichever was your choice. The trade covered the risk distance, and I booked partial profit at that time. Put trailing stop on the remaining position, which was stopped out as the stop pulled back in the later part of the day. That is how I entered the trade on Monday. What about Tuesday? On Tuesday after earning, the stock gapped down, and then it went above early range high, giving a possible gap buy setup. I bought the stock at that time. As it went higher, I booked profit on partial position, and seeing that it was starting to come down, I closed my remaining position. Again, I made a profit on this trade. On Wednesday, I tried once more. Let me show that. This was Wednesday's open. Initially, it went up, displayed the bearish headwind at the very top, and came down. Came down near the early range low. I thought that the early low would hold. And in anticipation, which was not a good idea, I took a long position on this red candle. Q does not allow me to take a long position on a red candle. That was in anticipation, and it was premature entry. In any case, I took a long position in this candle, and when the stock came down, breached the then low of the day, I cut my loss and came out of the trade. So I tried to take the GTM trade 3 times using precision entry charts, made a small profit on 2 days, and made a small loss on the 3rd day. I did not try after that anymore. This is how when you have earnings nearby, you may want to not use the daily chart, but use the 5-minute or 10-minute charts to take precision entry. If the trade goes in your favor, you could continue to hold at least partial position overnight, which I did not do because none of the days the stock closed at the high of the candle. If it goes against you, you could cut the loss like on Wednesday. If it first goes up and then comes down, you could book some profit. That is how I traded GTM this week. This week's trade ideas. This week, my preferred trading direction is not to trade, to stand aside, and therefore, I'm not going to look at any trading ideas. If you carry out the 360 degrees analysis using Q, you will most likely find many trading candidates today, just as you would almost every other day. Now that you have seen Q in action, it is over to you to benefit from that. I will end today's session here. I look forward to seeing you in my next session. Have a great day. And as I always say, as the live examples show, there is no reason not to do that. Trade profitably. Thank you.